Investors and companies have this common language to communicate about financial performance. Until now, they haven't had that common language to discuss sustainability performance. So now we get these standards to allow for consistent information, comparable information, and reliable information, allowing investors to really compare performance.
Joining me today to share his insights is Neil Stewart, Director of Corporate Outreach, Senior Market Leader Canada with the Value Reporting Foundation. You were on a panel here at REITwise focused on building out the finance function in ESG reporting. Now, obviously, there's a lot of different standard setters in the sustainability space. Could you go through some of the most relevant ones so that we can just have a baseline understanding?
Sure, and this is a big pain point for companies. The ESG ecosystem is crowded, it's noisy. It was built out of a patchwork of standards and frameworks really meant for different audiences and for different purposes. And the result has been what's been called an alphabet soup of acronyms. The important thing to recognize, though, is that it is simplifying, it's clarifying, and there are just a handful now of standards that are focused on the information needs of different audiences. Let's not confuse standards and frameworks with the ratings and rankings and questionnaires and surveys, right? Just on standards and frameworks, the key ones now are the SASB standards, focused on the information needs of investors, industry-specific information about enterprise value creation. The GRI, the Global Reporting Initiative, that's about a company's external impacts and meant for a broader audience of different stakeholders. And then the TCFD, the Task Force on Climate-Related Financial Disclosures, so important for climate risk.
And we've seen a number of mergers of different sustainability standard setters over the past year. Could you explain where the Value Reporting Foundation started and what the plan is moving forward?
The Value Reporting Foundation was created in 2021 out of the merger of the Sustainability Accounting Standards Board and the International Integrated Reporting Council, which maintains the Integrated Reporting Framework. This really brought together a focus on business reporting with a focus on investor needs for financially material ESG information. Now this end-to-end cycle from management decision-making, through reporting, through investor decision-making, and then hopefully a virtuous circle back to management decision-making. The Value Reporting Foundation was also created to help support the launch of an International Sustainability Standards Board, or ISSB. This has been launched by the IFRS Foundation. Again, a lot of acronyms in the ESG landscape. The IFRS Foundation oversees the International Accounting Standards Board, which is the international equivalent of FASB that we have in the US, which sets US GAAP. The IFRS International Financial Reporting Standards are used around the world, 140 countries. So now we have a new sister board alongside the IASB to set standards for high quality disclosure of sustainability-related financial information intended for the use of investors and other capital markets participants.
And what do finance and sustainability professionals have to do in order to prepare for this next era of ESG reporting?
You know, we take for granted the fact that we have this language for financial performance, accounting standards. We've had them for so long, we forget that we didn't always have them. Investors and companies have this common language to communicate about financial performance. Until now, they haven't had that common language to discuss sustainability performance. So now we get these standards to allow for consistent information, comparable information, and reliable information, allowing investors to really compare performance. What this means for finance professionals and sustainability professionals within companies is that we're bringing ESG information up to the level of quality and consistency and reliability as financial information. That's not easy. But remember how important this is. We're now seeing ESG data being used in investment decision-making, no doubt. It's being used in board decision-making around executive remuneration. It's being used around M&A, due diligence. It's being used for borrowing terms, loan and bond covenants. When you got ESG information at that level, it has got to be equally as reliable, as rigorous as financial information. What does that mean for finance professionals and sustainability officers? It's internal controls, it's data governance, it's verification, including perhaps assurance. So all of these pieces have to come into place in this puzzle to get this ESG data to be as rigorous as the financial data.
And finally, how can REITs become part of the standard setting process at the VRF?
So very shortly after REITwise, you can expect to see exposure drafts of the ISSB standards come out for public comment. There will be two key exposure drafts, one a climate standard and the second one general disclosure requirements. These will be out for comment, and we are seeking comment from companies, from investors, from the whole landscape of reporters as well as users to help inform the development of these standards.